we're going to take a look, of course, at our technical analysis, at Forex market, price action, etc. In today's webinar. This will be live charts, taking a look what could happen today and the rest of the week. Before we actually start looking at the charts, though, we do have a small PowerPoint to go through that will just explain the basics that we are looking at before starting. One of the things we have to discuss is this disclaimer explaining that the material here is intended for a global audience. Please take into account that it might not be suitable for everyone. To get the corresponding info on charting conditions and other details, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the disclaimer here and the content of it. All right, thank you for your attention. So we're going to take a look at moving averages. Moving averages are just a tool, though, or an indicator, to be precise, and they, of course, just help us in making decisions regarding trading. Decisions in, for instance, deciding when to enter, when to exit, when to stay in. So basically, prior to entry and trade management, and then the exit. All right. So obviously, you could use moving averages in various ways. You can make them your main tool and your main indicator and build everything around it, or it could be a supportive indicator, or it could be a part of your trading plan. The moving average could identify the trend. It could also easily be used for the other steps here as well. All right, so it's quite multifunctional. In general, though, before entering, this is a quick checklist that one could go through. I would definitely recommend at least these steps before a trade is initiated to make sure that basically the market hasn't been entered at a spot that doesn't match your strategy. We always want to make sure that the strategy is being executed according to plan, and thereby emotions and reacting to sudden, let's say, developments without thinking through this checklist, without checking this checklist, without making sure that the trading plan is indeed matching the environment. What I mean like that is that the price action is indeed such that our trading plan is executed, is similar to the environment we're looking for. This is a good checklist to have, at least. All right, if not longer and more comprehensive. But these are the basic steps that everyone should look at. Take a look at Admiral Markets in social media, of course. And with that said, we got pound GDP coming up. That's always a big news event, of course, something to reckon with as we go along today. We have to be careful with the pound regarding this event, of course. All right, so no, I would say be not trading the pound, preferably in during today. Otherwise, the rest of the day, let's take a look. We got dollar consumer confidence. We got a lot of euro news throughout the day, but that's green tagged or yellow tagged. Tomorrow we have ADP, by the way, and Friday we have NFP, so it could be slow because of that. Alrighty. So let's take a look at the pound and the euro, of course, as always. One second, folks. My computer is a bit slow. Alrighty. There we are. Let's start with the euro, though. So euro and pound dollar made some upside yesterday on the very open of the week. In fact, Monday was a very quick start. Moved up about the euro dollar here about 60 pips, I believe. After that, the whole currency didn't do anything for the remaining hours, funny enough, and it went just made some retracement to the downside. That's sometimes how the market can be. Makes a quick move, and that's the end of the trading day in the sense that we don't get any follow-through. If you were able to catch this reversal trade to the downside, great. But other than that, there was really nothing else to trade. And that's, of course, sometimes very difficult with trading, is to understand that, you know, there's kind of like 1-2 movements on a currency a day. And if you don't catch those, then there's really nothing much to do. Unless you're really scalping these few pips up and down like this. But that's very, very difficult. I wouldn't recommend that unless you really have a lot of experience in this particular activity. It's very difficult, though, as you can imagine, trading this kind of messiness. All right. In general, yesterday's open surprised me a bit because the last 2 weeks were extremely slow movements. And why is that? Well, if you just look at the weekly chart, first of all, and take a look at the last 2 weeks, the difference between the high and the low on the euro dollar. All right? Let's take a look. The two purple magenta lines indicating the high and the low. Well, 2 weeks ago, the high and the low, the difference was 75 pips. Last week, the difference was 70 pips. It's extremely difficult to, as a swing trader, you know, catch 70 pips if the high and low is 70 pips difference. Obviously, that doesn't match up, right? Because normally you wait for some confirmation. It's difficult to exactly pinpoint the very low and very high, obviously. So getting 70 out of 70 is virtually almost impossible, right? So obviously, if the week candle is so tight, there was little, almost none price action, to be honest, because I mean, 70 pips is already very tight for a daily candle, let alone for a weekly candle. So it was extremely slow price action last 2 weeks, and it's always dangerous in those times because of the fact that we could be overtrading in a time of very little movement, and we have to actually reduce our risk here and make sure that we don't lose too much, preferably if you're able to make some profit because you're scalping or intra-day swing trading there, that's even better. But in those types of weeks, swing traders are especially vulnerable to losses in these 2 weeks. All right, that's the advantage of an intraday trader. They could probably still avoid and you know, avoid much of this choppiness because of the daily view. Still not that great if we look at the daily, but a bit better. You can see a bit more movement. In general, let's see. Although the last 2 weeks, clearly also from a daily perspective, this is a pretty choppy zone here. But still, within those days, you had some movement. These candles, these daily candles, although tight, still had about 40-50 from high to low, but even 40-50 pips for a daily candle is quite tight range regarding the daily candle. Now, mind you, I'm not complaining, well, maybe partially, but you know, these things always happen. I'm just trying to show how you know, this is a type of environment that is going to have its dent on any equity curve, unless you're a specific scalper trader or maybe very cautious in the swing trading within the day. You could maybe limit that risk. Otherwise, it's just an extremely difficult time. So, you know, don't be puzzled if your results are not that great the last 2 weeks. It's not surprising if you look at this view. That's all I'm trying to show. Last week, I myself didn't have a great week either. The week before was good actually. So 1 week good, 1 week bad is not too bad for me, considering the last 3 weeks. In fact, I would say of last couple of weeks of slower volatility. Anyhow, with that said, euro dollar in general looking like it's about to potentially break out of this resistance like this. As we've been saying multiple times throughout our sessions on the euro dollar, that this is a potential 50 fib bounce after a potential 61.8 bounce. So if you're a swing trader, you may be holding longs from these areas with targets up at 139.70 or 140 or 143. Well, then you're doing a great job, because indeed, as we've already analyzed multiple times, is that this euro dollar is in an upswing, right? Therefore, there's always the potential that when you have swing high, swing lows to the upside like that, that these dips are potential bouncing spots. These dips are potential bouncing spots, right? So that's what's happening right here, right now. We're seeing a couple of bullish daily candles already in a row. Despite these choppiness on the euro dollar, it has posted 5 bullish days in a row, although it was with lots of ups and downs. It was with a lot of wicks. It was a lot of choppiness. So I wasn't able to gain that much, and even had a loss, small loss within this upside because of the choppiness. That can happen. Let's see. This is the 4-hour view, and this is the yesterday's upside plus retracement, and now getting some follow through. Personally, now, although I'm, as I said, bullish, this is very choppy, and it wouldn't necessarily mean it's good to go long now. Just because we're in an uptrend, right, doesn't mean that you should be going long at any point. If we look at our moving averages, which is the main focus of our webinar today, I'm using 4 at the moment, as you can see. Those that are in here regularly know which moving averages we are using. So those are in here regularly know that the moving averages are a big part of the usual plan that I have for trading. If you're new in here, by all means, if this is really your first or one of your first webinars, let me know so that I can still discuss some other things that might be new to you. Otherwise, I just assume that everyone here is quite regular, okay? You see 4 of them. Sometimes we use a lot more more moving averages to show what's going on. I'll do that in a second. At the moment, though, you can see easily that despite there are not as many moving averages as usual, that everything is bullishly aligned. Price is above the momentum moving averages. The momentum moving averages are above the intermediate moving average. The intermediate one is above the long-term moving average, and they're all pointed up. They're all bullishly angled, aligned as well to the upside. Plus price is above it. Right, so it's pretty straightforward what the trend is. However, that doesn't mean we want to be buyers necessarily right here, right now, even if everything like that is aligned. But you can see that was one of the reasons why this was a potential dip, because we went back to the moving averages. That could have been a bouncing spot as well because of that. We had confluence, not only the fibs, but the moving averages here, plus we had bullish alignment. Anyhow, enough about that. Right now, yesterday's high is right around the corner, all right? This top is right around the corner. It's right in front of us. Now, price can break through it, but it's a risky practice to go long 10 pips in front of a daily high. If we zoom into the 15-minute chart, you can see that for me, that would be a reason to be not going long here. It could have been a long upon the break of this trend line here, like that. That could have been a long because then there's still enough space up to the resistance. That's a different story. Right now, we need a break of yesterday's high to have an idea that this is indeed breaking to the upside, or a bounce back off of the pivot point, for instance. If we look at our 50-minute chart, if we look at our Kimberley indicator, those things make sense to me regarding the longs. The other thing would be, of course, the H4 long breakout, which is really basically the same as breaking yesterday's high. It's about the same level. It's just they're very close to each other. And you can see it's struggling. Price has a lot of wicks here. Despite the bullish structure, price is having difficulties because of the daily high. So I'll be waiting for going long until one of these two moments happens, the retracement or the break. Now I'm not looking for shorts because we're in uptrend. I want to trade it with the trend. I want to trade it with the moving averages. Just because there's a daily high yesterday that's close by doesn't give me enough reason to suspect that we could necessarily expect a big downside, a trade that over the long run would give us a positive system expectancy. No, I wouldn't think that that has the potential. It could make a few pips down, but it wouldn't be worth the risk in my opinion. So I would skip the short side. Pound dollar is moving up, and personally, I positioned myself on the pound dollar already to the upside earlier this morning in this mess here. So that is doing nicely. Now the reason why is because yesterday's high was pretty far away. We already broke yesterday's pivot point, as you can see, like that, or we were at it. And if we broke these tops, we're actually breaking the pivot point as we speak. So there seemed to be enough space on the pound dollar to make at least a bit of upside. So I like that about the pound dollar. Plus, the stop loss was relatively tight. I put it below the L3 here. Right, so that looked good. I realized that there was a potential for one more dip down to bounce off the L3. That's why I didn't want to put the stop loss right below these bottoms, for instance, right? Because I thought that was too risky. Although it worked, most likely would have worked, as you can see, because price is heading up. That I found too risky. So this potential, it could still be upside, but the news event is coming closer, so that makes it riskier to trade. As I said, I took it already a while back, so the news event was a lot further away. But in general, though, if the news event were not so close by, one could look for a pullback and continue, normally speaking. If that will happen today, we don't know. That will definitely depend on the news event, how that will materialize. But in general, that would usually be the case. But we don't know how the news event, as I said, will react and act. Now, why did I buy it here? If you're curious, let's take a look so that maybe in the future you could see the same thing. Maybe you already saw the same thing. Then that's great. Now, the reason I did that is yesterday we had on the pound dollar a bullish upside as well. Although we bounced off this trend line, we did broke this trend line. Plus, we broke horizontal resistance there. It wasn't a big break, but the break was enough for me to realize that there could be enough bullish steam left for some upside still, right? The breaks of the tops are not much. Here it wasn't too much, and here it wasn't too much either. But in the meantime, this is still continuing up and making higher highs, although it's not, the higher highs are not as high, as I would like them. They're still posting higher highs, and although I was cautious specifically about this particular zone here, where I have the red circle, because I didn't know exactly how far and how long that retracement consolidation zone would last. And I was cautious of the fact that, that particular zone could be very big. It could be actually a reversal. It could be a massive retracement. I was a bit surprised, as my Elliott wave analysis said, I thought actually that this dip would go lower. I was caught a bit by surprise by the early Monday upside, which I didn't catch. Because, well, I'm not a big fan of trading Monday that early anyhow, but especially after such a slow last 2 weeks, right? So I was a bit cautious yesterday, but it did move up. In a way, one could say that maybe is not so surprising because this is a sideways consolidation after an uptrend, so we should expect maybe upside continuation. As I said, I was expecting a bigger reversal or correction here. Bigger than this. This was already pretty substantial, but even bigger than that. However, yesterday's upside in 5 waves, for those who like 5-headed waves, 5 waves like this, indicated to me that there is a potential for a hook back and bounce. And yesterday I was already anticipating that the hook back could be deep. That's why I was already looking at a fib potential here and saying, okay, it could go back to the 78.6, the 88.6, or the 61.8. I didn't buy it yesterday because I knew that throughout the Asian session would be consolidation as well, but that's why I bought it at the end of the Asian consolidation, personally. So anyhow, going back to that, yesterday's 5-wave upside, telling me that this, in my opinion, there's a decent chance that this consolidation is over, and this could be a break, pull back, and go. It was worth the risk, in my opinion. So not sure how you see that. Maybe you disagree. That's okay. That's no problem. That's just my reasons for anticipating a potential bounce there. Is anyone Yes, along. Sorry for that lack of clarity there. Um, a bounce to the upside here. Along, indeed. Yes, I went long, indeed. There, right where the blue line is, about 168.10. Although I knew that it was a bit risky because the consolidation could always go lower and do this, right? That was definitely an option as well. That could have happened. That's why I was cautious with the stop loss, but it didn't, which is okay, which is good. I mean, better for me, in fact, but for those that are not in, of course, logically, a dip lower would have been good because then you would have gotten a better price. So it depends on your perspective if you're into trade or not, if it's good or bad, but you get my point. What, as I said, what would be a good entry point? Well, basically, I don't know yet. What I would do normally if there would not be a news event, and that's the thing, the news event is going to have a disturbing factor. It's going to have an unknown influence or impact, something that's not sure. We have to react to the events as they unfold. But usually, if we wouldn't have a news event that has a high impact on the pound, what I would be looking for is some kind of pullback on the 5-minute chart, like this, and then a bounce after a break of this bull flag, for instance, or a bounce at a fib. But I would first look for a corrective pattern and wait for the end of the corrective pattern. How do I know the corrective pattern is ending? For instance, that the AO is back to the 0 line on the 5-minute chart. In general, though, you could always put a fib on this swing high, swing low, and any of these 50 to 61.8, these could be bouncing spots. This could still continue up to higher ground, though, right? But at some point, there's going to be some consolidation and retracement, maybe even a spike, depending on the news event data. Considering the fact that we have a news data soon, I wouldn't expect this to go up too much, though, because the market also knows that there's a news event data coming soon. Therefore, the market will not move away too far from its average. And I wouldn't expect this to fly up much more. I would expect consolidation until the news event. Because the market also knows that there probably will not be much movement until that news event is released. So the path of least resistance is now maybe consolidation, not continuation of this upside. Let's see. That's what I think at the moment. I don't think that it will fly up another 50 pips, for instance. That seems very unlikely to me. Euro pound, just in general, we can say that it's pretty choppy at the moment. Not much else to say, I think. Odd USD could be at a bouncing spot. I like the odd USD potential here for a bounce. That is in my opinion a decent opportunity. We have a pivot point pretty far away still, relatively, about 30 pips away. So I wouldn't be surprised to see a bit of a bounce here up to the pivot at least, if not even higher on this odd USD. So I like this this L3 potential here. Let's see. Now the reason why I see it also as a good potential bounce is just because of the long-term time frames. If you look at the daily chart, we're at a potential bottom of a daily uptrend channel. Right? So that is one reason. Also, if you look at this 4-hour chart, what do we see on the left? An impulse, consolidation, impulse. This is a supply. This is a supply and demand zone. Anywhere in this, between those magenta lines, price can bounce for upside. We're very close to the bottom of that zone, in fact, and we're close to the bottom of that uptrend channel. Therefore, I would expect upside. Now, if we look at the moving averages, there's a bit of a mixed picture, but we can see that the long-term moving average is still bullish. And the daily, intermediate, and short-term are bullish. So even the moving averages, although a bit more mixed picture, are showing potential bullish bounce. The 1 hour moving averages are, at the moment, though, bearish aligned. And that, of course, doesn't surprise us. Therefore, this bounce here is an early trade. It's a counter trend trade on the hourly. With the trend trade on the hourly would mean price has broken through the moving averages, has hooked back to the moving averages, and has bounced off those moving averages. Then we would have an hourly uptrend which is aligned with the 4 hour and daily. At the moment, the 4 hour daily are more bullish, or there's reason to see some bullishness in those moving averages, except the daily long term. That's the exception. That's okay. But the hourly is actually pointed to the opposite direction, which means there are two things that could happen. The hourly downtrend beats the support and breaks through the support, and we just continue with this downtrend. Well, then things look very bearish on the odd USD, right? Then odd USD is going lower than anticipated, or price starts to bounce off of this support level for more upside and starts to break the resistance and start to flow to the upside again with the 4 hour daily uptrend. Then this downtrend on the hourly is over, soon will be over, right? I think it's a bouncing area, and there's a good chance to start that upside right here, right now. All right, and I wouldn't be surprised that the L3 here is the bouncing spot, and the moving averages that are bullish, bearishly aligned in the 15 and hourly will soon get broken, probably. All right, in my opinion. Now, where would it be interesting to trade? As I said, if you want more confirmation, don't trade it and wait for price to be above the moving average on the 15-minute chart, and that would be then a safer entry. This is a riskier setup, a riskier structure, and could therefore ultimately also fail easier. If you like a riskier trade, then trading this bounce here to L3 made a lot of sense. If you didn't get that, waiting for the break of this fractal could make sense, right? That's also the 1 hour fractal, in fact, right here. But that is a risky trade with a stop loss below here. The other method could be wait for the break, pull back, and take the pullback, right, of this swing high, swing low, the future swing high, swing low. So let it break, pull back to about halfway, and then take the bounce there. That's another way of doing it. All right, it depends what you prefer, breakouts or pullbacks. Kiwi is looking the same. Kiwi also the bouncing spot, in my opinion. Why? Because it is actually close to daily support. All right, they're red for the moment, but just consider that support. Okay, those are potential bouncing spots. Support is potential bounce. Resistance too. All of these support and resistances are potential bouncing spots. And if you look at the daily chart, you can see why. We got, daily levels in front of us on the Kiwi. Despite the downside the last 2 weeks, this could be a bouncing spot. Now, in the longer run, the Kiwi doesn't look as bullish. The structure of the Aussie is looking a bit different, right? If you look at the daily. Not to say that all resistance is out of the way, but if you look at the weekly, you can see that this is definitely an uptrend channel. That's looking bullish, doesn't it? We do have some resistance here above it. That could definitely act as resistance and send this back down. I'm not saying, but at the moment, it's looking more bullish. However, the Kiwi is different. The Kiwi, what does it have? I think the Kiwi has a potential head and shoulders here pattern. Although it's maybe not a perfect head and shoulders, it does have that those characteristics of such a pattern. Those red lines, therefore, the horizontal red lines, therefore, are or can be considered like a neckline. In certain ways, one could even consider the neckline already to have been broken. But we know that with the neckline that shallow, that the horizontal levels are also important always, of course. So maybe the neckline is already broken, but we certainly have horizontal levels left that are still there. So what could happen? We're looking at the Aussie and the fact that it is at a bouncing spot. The Kiwi could be at a bouncing spot too. Will it bounce? We don't know. It could break through the support and fly down a couple of pips, right? But I would say there's a high chance we see some bounce. How much bounce? We don't know. That could be limited because of the head and shoulders pattern. And if we look at the 4-hour chart, maybe we only bounce a bit, hook back to the broken trend line, hook back to these resistances here, and then break the neckline fully for a down move. That's something that could happen. For the moment, though, that's a future concern, not really too important right here, right now. At the moment, the blue part, the potential bounce, is something that is important. So with that said, how I look at it, therefore, yes, also bearish in its 1-hour moving averages. But if you look at the daily 4-hour, there's reason to expect support and resistance. The 4-hour is actually already bearish as well. So the moving averages are showing more of a downside on the 4-hour, 1-hour, and 15. Only the daily is still actually bullishly aligned. So that's quite a hefty downside. That also indicates the difference with the Aussie in the sense that, you know, the Kiwi has a lot more moving averages pointed down. So in that regard, the trend is down. However, the currency is just close to support. If you look at the 15, L3 could be a long, but this is 2 against the trend, therefore a lot riskier. I wouldn't be trading the Kiwi though because of that. All right, the Aussie does look a bit different because of the moving averages. The Kiwi is not something I'm looking to go along, despite the bouncing potential. Is not enough things are aligned and giving confidence for the upside here, in my opinion. It's too risky to trade against that many downside moving averages. It could work. I'm just saying that the Aussie seems to be a bit better set up than the Kiwi. Despite that, the L3 could always be the bouncing spot, of course. If you'd like to trade Camarilla as a standalone thing, then take a look at potential idea here for a bounce to back to the pivot, for instance. Dollar CAD. Dollar CAD is breaking to the downside. It is surprisingly, now I don't want to sound repetitive, but the dollar CAD really had this was, extremely tight, even tighter than the euro. This was really no movement at all. It had a weekly candle high and low that were only 52 pips apart from each other. If you look at the daily chart, about 1, 2, 3, 4, 5, 6, 7 days in a row, the high to low was not more than 40 pips, with the primary direction of this dollar CAD going sideways. A 40 pip difference between high and low of the daily chart, daily candles, and all those candles more or less going sideways is extremely tight and extremely slow. And well, we have to see if the market is going to move down, break this, let's say, triangle to the downside, or will it move to the upside? It seems to be breaking to the downside. Something like this. Seems to be pushing as we speak. There we go. So could be maybe some downside. It's not something I would like to trade because of the lack of volatility on this dollar CAD. I'm not interested in trading it. I'm just observing it regarding the CAD point, just to get some information regarding the CAD, for instance. The dollar CAD is not something I'm looking to trade. There's also some horizontal support that could still provide a bouncing spot. But otherwise, if we do break that, there could be some downside down to those fibs. But I'm not a big fan of this trade idea. It's just I'm just giving you my opinion and observations. That's all. But I would not be looking to trade that analysis. Let's see. Coco is asking a good question here. Can you explain why the odd USD is a potential long without to New Zealand? Again, sure thing. What I like about the audio is that there's a clear uptrend channel here on the daily chart. That's one thing I like. It doesn't have a head and shoulders pattern like the Kiwi does. It actually has a potential bull flag pattern, in my opinion. If you look at this 4-hour chart here, like this. Now that bull flag could be a downtrend channel. I'm not saying it could turn into a downtrend, but for me to consider that downtrend, it's too close to this support level here, the magenta lines on the left, where I have this this zone in here, where I have the green lines there. That zone is a strong support, in my opinion, where the green and that zone between the green lines and magenta lines, let me color that. That's this green zone there. That's a potential strong support because of the fact that we had a impulse prior to that and an impulse after that. That's a supply-demand zone, which is basically a big support level. And until we break that bottom line at 92, plus the uptrend channel, I'm looking at that as a potential bouncing spot. Also, one more reason is that the audio USD moving averages are more bullishly aligned on the 4-hour and daily than the Kiwi. A bull flag is basically a corrective. It's a chart pattern, first of all. It's a chart pattern which indicates trend continuation. Most likely, that's the goal of it, at least. Not always turns out to be so, though. The goal, the pattern is basically where you have an impulse followed by a slow moving opposite direction price action. If you have up impulse like we do here, we have the blue lines indicating up impulse, then what it would mean, a bull flag is basically a slow move in the opposite direction to the downside. Slow direction to the opposite side. Right? That's a bull flag. Up impulse followed by slow downside. A bear flag is the opposite. That is a down impulse followed by a slow corrective upside. Now, not always will these patterns play out. What is the likelihood of this pattern? The advantage of this pattern is that when it breaks the top of the bull flag, we get upside, a good chance of upside. When we break the bottom of the bear flag, we have a good chance of downside. That is the value of that continuation pattern. But not always will the pattern play out, and that's why waiting for the confirmation of the break of the pattern is good. Sometimes the flag doesn't turn out to be a flag and actually is part of a downtrend or an uptrend, or let's say part of a reversal. So that was a quick 1, 2, 3 explanation. I hope that wasn't too fast regarding the bull flag there. But those are the reasons why I like personally the odd more. But we can take a look at the odd New Zealand, which makes a lot of sense, obviously, to do that. We should have done that right away. And we can take a look at what structure it's giving so that we have an idea if that makes sense. Does that analysis hold true when we look at the odd New Zealand? So when we look at this, what do we see? Well, we see certainly a very big upside, but also some hesitance to continue. Now we know that if you look at the daily, there was a big downtrend. So if you put a fib on this last swing high swing low here, price stopped at the 88.6 fib. So we could be in a triangle potentially, therefore we could put a fib on this last upside. Price stopped at the 38.2 fib at the moment. So there is some bullish bounce, let me say it this way, to put it cautiously. Obviously this was a massive downtrend for very long. But we do have reasons to expect a bounce to the upside because of monthly support, because we had a move up, a hook back, and continue like this. It could be a bullish rebound here on the long term as well. So, but if you look at this daily, it could easily retrace lower as well before we get the bounce. So that's a bit of a question mark. It's not as clear on the New Zealand, that bullishness necessarily. But I wouldn't say that it's clear bearishness. Of course, the moving averages are pointing down, but there are too many things that argue of a potential bouncing spot here on the odd New Zealand, and therefore there's a strong reason to expect some reversal, or at least some retracement on the odd New Zealand to the upside. The odd USD breaking point, you can either try to take the bounce, which is right here roughly, right here. The safer stop loss is below 92, and you can target 95.20. That is about a 50 pip risk and a 280 reward, 270. It's about a 5.5 to 1 R2R. That's something that one could think of right here, right now. Is it worth the risk to look for 5.5 to 1? I think yes, but it doesn't mean that you think the same. That's always your decision, of course. That could be one way of tackling this odd USD. The stop loss has to be, I would say, at least below 92. If that's a bit too big of a stop loss, because that is, in my opinion, the technically correct stop loss according to the tools I use, but if you think that's too big, then you would need to wait for probably a break of this 1 hour top here, let it hook back to a fib, for instance. 1 second. For instance, this, move up, let it hook back, and then you can use this bottom as the stop loss guidance. At the moment, I think that's a bit risky, though. Why? Because there's a lot of downside momentum on the 1 hour chart. So I think using a tight stop loss below this bottom, below 92.28, is risky. Would not be my preference, because it has, in my judgment, too much risk of being hit, despite the potential bouncing spot. I know that this could be a bouncing spot, but will it happen? That's the question. We don't know what the exact odds are of that happening. And there's definitely that risk that we can make one more downside before we do make that bounce. Of course it could be bouncing right here, but do we want to risk our capital with a tight stop loss with the risk that it could make one more downside, take our stop loss and bounce? I don't think it's worth it. So indeed, like Coco says, 91.90, for instance, that could be an idea. As long as it's below 92, like 91.90 makes sense to me. I think it would be the ideal spot, because if price goes to that level, then it would invalidate, the whole idea of a bounce, in my opinion. Therefore, that would be the ideal moment also to say goodbye and exit this particular trade, because then the whole idea of the trade is invalidated, right? So that makes sense. Good job, Coco. And well, that's one way of doing it, is taking the bounce right here, or upon the break of this, right here even, if you're swing trading it. Obviously, if you had it, you got it 90 to 30, you got 14 pips better, but even here, it's possible. The other way would be to break for this 90 to 50 level, or wait for a break, pull back to 90 to 40, and take it there. Those are entry possibilities. Or because Coco is asking about the breakout point, or wait for the break of this blue line. Wait for the break of the trend line and hook back, for instance. That would be something in the future. That would be also one way of doing it. That's waiting for more confirmation. Why? Because then we'll be in an uptrend on the hourly, and that would be waiting for more confirmation. That would be the breakout point. This is all bouncing area, bounce early. This is basically trying to catch the, let's say, catch the rebound. This is, how do you say it? This is not confirmation, the opposite of confirmation. This is anticipation, right? Above blue, that's confirmation, because we're confirming that we're out of that bull flag. Yeah, the other way could be, indeed, the other option, indeed, is waiting for one more potential downside. We don't know if we're going to get it, but if it does, somewhere 92.20 could be definitely a bouncing spot. If it does happen, that would be, of course, obviously, a nice discount compared to 92.45. Certainly. Yeah. Yeah, then you could have a tight stop loss of about 30 pips with it. I mean, I would say a decent win percentage chance. But especially appealing is the R2R because, I mean, I would go for 95.20 as a target, which means basically 300 pips. The R2R is 10 to 1 in that case, which is extremely high. I mean, even if you win only 20% of those trades, you still have a positive expectancy because of that huge R2R. What else? Dollar yen moving again to the upside today. Yesterday already was moving up. Broke this trend line. Now broke this trend line here. Making some bullish upside. So what could be the target? We could put a fib on this upside. A rebound of the 50 fib. And the target could be 103.10. Now we've broken through the H3 a bit. We've broken through yesterday's high. So to me, there's a good chance that any retracement could be upside potential. Now, I'm not a big fan of the dollar yen just because of its entire choppiness. But if you look at this from an hourly perspective, from lower time frame perspective, a retracement of this hour's bullish candle, for instance, could mean a potential like this to the upside here. So despite my enthusiasm for the dollar yen, it does, it could make sense. How about the Camarilla? Let's take a look. Yeah, we talked about that already, sorry. Pound yen. Well, it is pushing up, but it's to me quite close to resistances like this, which makes it a bit awkward to trade, unless you're trading a pullback, and either you took the pullback here, I guess, or it doesn't seem to be that interesting at the moment. It's right at the R1 at the moment. Euro yen 2, moving up a lot. Alrighty, Euro odd, 50-minute chart. Let's see. Well, we have R1 here too. Actually, Euro odd moving up a lot after its bounce here. Very strong bounce. Took a while, took a lot of choppiness, but now it is moving up finally. With that said, though, we do have divergence here, so I would be careful of the upside. Plus, if you look at the most recent part, we have 1, 2, 3, 4, 5th hour, not breaking this top. That looks like, plus we have potentially at the end of this hour, we still need to wait 24 hours, 24 minutes, but we have 2 wicks here, and we have a wick here. This is looking like some struggle. This is looking like a potential, at least a retracement spot. First of all, we have divergence. Second of all, we have a wick here. Third of all, we have 5 hours not breaking this top. Fourth of all, we have another 2 wicks here potentially. That looks like a potential retracement slash downside potential to me. Or at least I wouldn't be looking for longs. Pound odd, the same thing. Although pound odd has challenged the high, in fact, so that makes it a bit different, maybe. That's because the euro pound is probably moving just slightly to the downside. Bob is saying, euro odd, that there's maybe a potential of the odd bouncing higher. And if we look at the odd USD and euro odd, they seem to be in sync indeed. I agree. One would say there's a decent chance of odds, at least some odd power. We're not sure how much because this is still moving up, just like the odd USD is moving down. But they're definitely decent clues, in my opinion. These 4 clues are definitely lining themselves up, and showing some potential for the euro odd to retrace. If you look at the 4-hour chart, what do we see here? We see a 4-hour pin bar. Bearish close in the candle before that. So if you fib the last swing high, swing low, with such a pin bar, one would expect at the very minimum a move down to the 38.2 fib, right? If not to lower fib. So definitely agree, Bob. Good observation there to combine those currencies to make a cross analysis there. Pound New Zealand is moving forward, and I think we discussed about that, the potential for price to continue to hover grounds on this Pound New Zealand, slowly but surely. And it has been doing that ever since it broke this triangle, this magenta triangle. Basically, it's been pushing up higher and higher. Now that doesn't seem interesting to me because it's very extended on the 15-minute chart. They got divergence here, maybe even double divergence. Plus we are far away from the moving averages, which means that there's a good chance that we'll make some retracement before we continue, potentially continue, because otherwise, you know, there's at some point this is going to make a bigger retracement. I don't think it's worth taking a trade right here at the top of a up move here. Right? This is already pretty far. Why take it here? Why not plan at least on some retracement? Not that I'm fond of this Pound New Zealand in general, actually, but that doesn't make sense. It is, though, in an uptrend, and I wouldn't say there's enough reason to expect to necessarily count on a reversal trade. There could be a retracement trade, as I said, it could be a small retracement, but that's not worth trading in my opinion. So I'm not interested in both sides because of that. EuroCAD is very choppy, in fact. Thanks. The CAD remains choppy. Pound CAD is different though, because the Pound CAD is following the pound a bit, and the pound had bullishness yesterday. So it made an upside too, and it also bouncing off support. And I had the same philosophy yesterday about the 886, 786 fib. This is indeed bouncing off those fibs. So there's potential primarily because probably of the pound, but also, I was thinking dollar CAD was in that triangle, and the question is, at that time, that the pound CAD was still at the point where the dollar CAD was in this triangle, right? It just broke recently. That's what I mean. The dollar CAD was at the bottom of this triangle, so there could have been a bouncing spot, although we didn't bounce eventually that much to the upside before we are now breaking it. It could be a false break, though. Let's see. I'm a bit cautious with this CAD, to be honest. What else? Let's see, this is the odd yen, Australian dollar yen. Seems to be quite choppy, broke out of this consolidation like that. Oof. In general, though, very, very choppy. Yeah, very, very choppy, this price action. The only downside happened during the news event. That's it. All right, so that's not so interesting. One second, folks. Alrighty, so that's the usual pairs, I guess. I'm looking at. The yen seems to be awakening a bit. Not that I'm a major fan right away, but seems to be a bit of a awakening on the yen. Just a tad. CAD seems very sleepy. How about the Swiss franc? We didn't take a look at the Swiss franc yet. The pound seems to be moving pretty decently, but it has a news event pretty close by. This is the dollar Swiss. Well, the moving averages are saying downtrend, but boy oh boy, this was choppy too. And well, this doesn't seem that attractive to me. Maybe other pairs, the Swissy could be more interesting, but we see definitely daily divergence. Between these bottoms. We also see basically price trying to box itself out of a maybe a falling wedge, for instance, like this in the past. Something like that, plus the divergence. That could easily mean that this is a hook back from upside. I don't know. It doesn't seem that attractive. Maybe some other Swiss franc could be such. See you, Bob. See you soon. And odd Swiss franc. Could be bouncing spot. That's because more of the Aussie, I would say. I don't know. The Swiss franc doesn't seem to be that interesting either. So Swiss franc, no. CAD, no. Yen, maybe. Pound seems to be interesting. Euro could be interesting. Aussie could be interesting, primarily. So basically, euro dollar, pound dollar, odd USD, euro odd, pound odd. The rest don't seem that interesting to me at the moment, at least. That could change, of course, during the day, but the Kiwi, the dollar, the CADs in general, the Swiss francs in general, the Yens, doubtful, and the New Zealand's doubtful, don't seem to be that great. So that's my take on things. How do you see, is anyone in a trade at the moment? Did anyone take a swing trade yesterday? Did anyone trade today or yesterday? We could take a look at that. Or are you still flat? Give me your answer. I mean, no harm done if you haven't traded. This is not, a right or wrong answer. It's just curiosity from my side, what you see or what you basically trading at the moment or not trading. Because I've shown you basically what I wanted to show you, so we have some spare time maybe to discuss other things. Coco is saying flat. Anyone else? And it does make sense, by the way, because the market is definitely not something to be jumping for joy about necessarily. But Soko is long odd USD, great. Sylvia is pound dollar. Okay, great. Coco made a mistake there. I hope you don't mind me sharing to short pound dollar. Yeah. Well, I mean, you could shorting can. I'm not saying that it wouldn't make sense at some point. I don't. Depending on where you shorted it, right? With what intent? And with it depends when and where. If you short it, for instance, somewhere here, or even here, I think that makes sense. It's nothing wrong with it. It's just that unfortunately, for those that are trying to stay in for a bigger move, it didn't happen. So then you have to be aware of the fact that if something like this happens, it could also be a triangle for more upside. That's the only thing. Yeah, yesterday it moved up fast. It went up to 168.57 indeed. Didn't get much follow through after that, which doesn't surprise me that much. A lot of wicks here, definitely a struggle. But that struggle was, in my opinion, only for a dip down before finding support again, most likely. And personally, I wouldn't think that's a great. I mean, it's always your decision, of course, but it's too bullish for me to look for, in my opinion, to look for shorts at the moment. It could still struggle here. I'm not saying, but it's against my rule to trade it here to the short, because I would need more signals, more reasons for a short, and the market hasn't provided that. It did provide it here, with the potential for retracement, but now that we've broken, I would be cautious. That's looking like a continuation territory. That's why. So I'll be cautious of that. James is asking about the Swiss. Yeah, but that's one. Before I actually go to the Swiss yen, it all depends on how you trade it. Maybe you see something I don't see. Maybe you look at it differently. Maybe you use an indicator I don't use. So this is just my opinion for my own trading, right? That doesn't mean that it couldn't be a good idea. It's just that it's not good for me. Swiss yen. Looks like a bullish breakout at the moment. Moving averages were absolutely as flat as can be on this hourly chart. It's really ugly, in fact. But price eventually did break to the upside. Not only did it break to the upside, but price moved up, slowed down to the downside, and then moves up again, thereby pulling away the moving averages from each other. That's important. The daily chart, though, definitely very bullish if you look at these moving averages. Moving average, long-term, intermediate, short-term. Price above it. So price retraced back to the blue, bounced above the green, went back to the green, bounced off the green, back to the green, went sideways, now bouncing above it again. Thereby, it's looking like a bullish breakup potential here. Maybe there will be yen weakness to come. I don't know. Dollar yen is moving up. Who knows? If you're looking for a reversal, I'm not sure how you're viewing this, but in any case, it's definitely an uptrend. If there's any pivot point that could turn this around, any pivot that could turn it around? That's a good question. Well, obviously, resistances are always going to be crucial. And if you look at the weekly chart, these are the two main resistances here. Those two levels can always provide a big headache for this uptrend. So one would have to think about price getting very close to those resistances, like 886 fib and the top, 117.50, 117.78. If you're looking for a reversal, that could be a bouncing spot at least. Otherwise, it's definitely looking bullish. It would be difficult to, to catch maybe a downside. Let's see. Cocoa, indeed, pound dollar entry was 168.11 or 10. Somewhere in here, yeah, something like that. So that's the Swiss yen. I haven't looked at it, I mean, for a decent while, so maybe I can't really say too much. That was this morning, before the during the end of the Asian session. So I can't really maybe provide too much guidance. I think the resistances obviously will always be important. Other than that, it looks like a clear uptrend to me. I don't really fancy it either way at the moment, just because of the flat moving averages on the 4-hour chart. However, looking at the daily, we could clearly see there's a potential for price to be boxing out of the short term. It's already above the intermediate and above the long term. So uptrend, but be careful of the resistance. That's really all I can say. So sorry if that's maybe a bit on the short side there. But Aussie USD, we can take a look again, no problem. Aussie USD basically, to me, seems like a potential bouncing spot, but whether it's here or if it could bounce off the 92.20, that's the question. We are in an uptrend channel on the daily. We are in a bull flag at the moment, which could mean a continuation sign. We have a supply-demand zone here that could act as support as well. Therefore, 92 is an important level, in my opinion. A break of that bull flag or bounce here could be potentials for upside, with the target at 95.20, I would say. Other than that, moving averages are slightly still bullishly aligned as well. So that's what what the reasons for my bullishness there at the moment. Well, folks, I guess that wraps it up from my side today. Thanks all for your feedback and input, and for spending your valuable time with myself. And I hope you enjoyed that, and at least, although the lack of maybe not that many trade ideas, but at least some potential, I would say, on the Aussie, maybe in the Euro odd reversal trade. And we have the usual webinars lined up for tomorrow, of course, tomorrow morning and tomorrow evening, and then again Thursday morning and Thursday evening. Next week, by the way, I'll be out of the office, so I will not have any webinars during that week, nor I will be available with Nanette on Thursday evening. So we will miss each other there for a week, but I'm sure you can use the break for those that are here more often. And we'll be back 2 weeks from now as usual. Okay, James is looking for resistance with the Swiss yen. Yes. Yeah, the yen is very consolidation and corrective. It's not as difficult. The parameter for the moving averages, I have different ones. Let me write that down for you, Dalish. Sorry if I can't pronounce that name correctly there, your name. The target for pound dollar, I'm trail stopping it, but if it gets up to 169.70, then that would be great. Otherwise, I'm just trail stopping it on the hourly. But if it gets up to close to 170, then that's where I would want to see some profit or take some profit. Uh, 169.70. Yes, that's it. 169.70. Exactly, Coco. Yeah. That's the anywhere from there to 170.40. 170.40 because then 170.40 is where there's a very big weekly resistance. It might not get there. That's what I'm saying. I'm not necessarily exiting only there. I might exit earlier. But that would be the primary target for the moment because I always try to trail stop it to cut losses short and to let winners potentially run as much as possible. Well, folks, thanks again, and have a great day, have a great trading, and have a great day as well. Cheers, and talk to you soon.